Welcome to Talk Tickers, where we break down the earnings calls that move markets. Today, we're tackling Rocket Lab. They just posted a bombshell of a quarter, so let's dig into what it all means. Right out of the gate, management came out swinging. CEO Peter Beck's message was crystal clear. The momentum is real, and they're just getting started. This wasn't just a good quarter, it was a statement. So, what did the market think? Well, the stock popped a very respectable 8% after hours, which sounds great, right? But, and this is a big but, the options market was betting on something way bigger, closer to 12%. So what gives? Let's get into why a solid reaction wasn't the explosive one some traders were banking on. Okay, first things first, let's look at the quarter itself. The headline here is simple. They absolutely crushed it, setting records pretty much across the board. Okay, just look at these numbers. A solid beat on revenue, yes, but what really jumps off the page is the earnings per share. Wall Street was expecting a loss of 10 cents a share. They delivered a loss of just 3 cents. I mean, that is a massive surprise and a huge step toward becoming a profitable company way ahead of schedule. And let's talk about that revenue for a second. $155 million is a 48% jump from this time last year. That is some serious growth. And importantly, it's not just a one-trick pony. This is coming from both their launch business and their space systems division. Both are humming along. Now, this number, 37%, this might be one of the most important metrics of the whole quarter, a record gross margin. So what does that actually mean? It means for every dollar of hardware and services they sell, they're keeping more of it as actual profit. It shows they're becoming way more efficient as they scale. They're not just getting bigger, they're getting smarter about being big. So Q3 was fantastic, but you know how it is. The market is all about, what are you going to do for me next? That's where guidance and the backlog come in. This is what really drives the stock from here. And wow, they did not hold back. Look at that jump. They're guiding the street to expect about $175 million for the fourth quarter. That's not just growth, that's accelerating growth. It just screams confidence from the leadership team. So where's all that confidence coming from? A huge part of it is this number right here, $1.1 billion. That's their total backlog. Think of it like a giant pile of signed contracts, work they are guaranteed to get paid for in the future. It's another record, and it gives investors incredible visibility. All right, so the numbers look great, but the earnings call itself was about more than just the past 3 months. Management really wanted to hammer home the long-term story. And right now, that story has 2 main chapters: their next-gen Neutron rocket, and their savvy acquisition strategy. Let's talk Neutron. There were questions about the timeline, and CEO Peter Beck tackled them head-on with this quote. He's basically saying, look, we could rush this to hit a deadline, but that is not how we do things. He's framing this not as a delay, but as being disciplined, sticking to the process that works. The message is clear. Getting it right is way more important than getting it fast. And here's what that discipline looks like in practice. We now have a clear roadmap. The rocket is expected to be physically on the launch pad in the first quarter of 2026. After that, once it's passed every test they can throw at it, we'll see the first flight. So yeah, it's a bit further out, but now it's a concrete timeline. And the market hates uncertainty. At the same time, while they're building Neutron, they're also busy buying other key companies. They're acquiring capabilities that let them move up the food chain to become what's called a prime contractor. Think of it like this. Instead of just selling the engine for a car, they're positioning themselves to build and sell the entire car. It's a direct play to win huge, lucrative contracts, especially with the US government. Okay, so let's put on our analyst hats. We've seen the results, we've heard the strategy. Now what does it all mean for the stock going forward? This is our take. So here's the big question. The stock is up 8%, the quarter was fantastic. What's the trade from here? Well, remember that gap we talked about? The difference between the 12% move the options market feared and the 8% move that actually happened? That little detail is where things get really interesting. Here are our predictions. We think they'll hit the high end of their own guidance next quarter, maybe even nudge past it. But, and here's our key call, we think the stock reaction might be kind of muted. Why? Because the bar is higher now. A great quarter is the expectation. It's priced in. All eyes have now shifted to one thing: execution on that 2026 Neutron timeline. This whole situation sets up a textbook case of what's called implied volatility crush. It sounds technical, but it's pretty simple. Before earnings, uncertainty is sky high, so options are expensive, like buying insurance right before a hurricane.
After the news drops, all that uncertainty vanishes. And if the stock moves less than people were betting, the value of those options gets, well, crushed. It collapses.
So knowing that, it leads to a plausible trade idea for next quarter. The thesis is simply that this pattern is going to repeat itself. Options traders will get hyped, they'll price in a massive move, but the actual reaction will be more rational. The strategy then is to basically bet against that excessive hype and profit from the difference between Wall Street's excitement and the stock's more measured reality. So, wrapping it all up, our official rating, we're initiating coverage with an outperform. Bottom line, the company is executing beautifully. The core business has incredible momentum. And while Neutron is the giant long-term prize, the foundation they're building right now is incredibly solid. And as always, this is for informational purposes only and is not financial advice.